Now let's take a look at how partners' net income is divided and how it's shared out to the different partner accounts. In the past, we've had one equity account, and so that meant that all of the net income would go to that one equity account because there was one owner. Now we're looking at partners and partnerships, and unlike a sole proprietorship and a corporation, each partner has to have a share of the net income or the net loss sent to their capital account at the end of the year. And so that's normally dictated by the partnership agreement that states how things should be divided. And so we understand that in net income can be divided by number of ways. They can say, okay, I have a certain percentage, you have a certain percentage. We share it, but it all comes back to 100%. Or they can say, okay, here is $10,000. Everybody gets $10,000. Then we share what's left by that percentage. Or they can say everybody get 10,000, everybody get a certain percent of interest on their investment balance. And then after that, if anything is left, gains or losses, so net income or net loss after that point, that is shared. And so it's just a good reminder that everything of our partnership is shared, whether it's net income or net loss. If after paying off certain things, there's a loss, then that loss is also shared. And so let's see how that looks. This is an example of what it looks like in a textbook. And so what I want to do, they say that the partners are Leah Chen and Maria Monroe. So I'm just going to start in the same fashion, Chen and Monroe. And this is going to be, I'm just going to call it a partial income statement for the year ended. I'm just going to say December 2024, because there are no dates. All right. And so it says that they formed a partnership dividing income as follows. They have an annual salary for Chen is this amount. So that means Monroe doesn't get a salary. Interest of 4% for each partner's capital balance on January 1st. And then any remaining net income is divided by Chen 2 to 1. So that means if you're not sure about how ratios work, 2 to 1 just means that if I add the two numbers together, 2 plus 1 is 3. So Chen is going to get 2 over 3, 2 divided by 3. His percentage is going, or his or her percentage, I guess, is going to be 67%. And then that means Monroe is going to get the difference. So equals 1 minus 67% means that Monroe is going to get 30%. So that's how we work those ratios. So Chen is getting this. Monroe is getting that percentage. And that's only of the loss or the profit at the end of it after we've done all of the other things. Okay. And so it says that net income for the year was 70,000. So how much income is going to be distributed to Chen and Monroe? And so we can do it in this form. And so what we're going to do is we're going to take our net income. And actually, this is one way to do it. I prefer, it may be a little bit more easier to follow. I prefer to do it in the form of a table first, and then you can always reorganize it in this form. So this probably is the final form. And so we're going to have Chen and you're going to have Monroe at the top. That way you can easily follow. So right now it says that my net income is 140,000, right? So what I'm going to do from that point is 140,000 is my total net income. I need to figure out how I'm going to divide that between Chen and Monroe. And so the first thing we do, they first say is income is divided as follows. You always follow what the question says is the way that income is divided. They say that Chen gets a salary of 35,000. So somebody is going to get a salary. Chen gets a salary of $35,000. Okay, so that means, therefore, Monroe doesn't get one. So the total salary given is going to be 35. I now need to look and see, okay, that's a portion of my income gone. So I now have 105,000 to work with because 140 minus 35 in salary gives me $105,000 worth left to dish out or distribute to the partners. We have to go until the 140 is fully distributed. All right. That's one part. Next, they say interest of 4% on each partner's balance. And so interest is next. And so they tell us 4% of each partner's balance. So in other words, Chen's balance was $90,000. Therefore, I'm going to pay Chen 4% of the 90,000. So 90,000 times 0.04, which we should know is 4%, means that Chen gets an additional 36,000 in interest. And then I'm going to calculate for Monroe. Monroe was 140. So I'm going to change this to 140,000. Monroe gets 56,000 in interest. 4% of each partner's capital balance. Now make sure you pay attention. Sometimes it says capital, sometimes it says average capital, but you have to make sure you're doing what it says. If it says average, then we should know the average is going to be the sum of two numbers divided by 2, that is the average. And then you calculate 4% on that amount. But because it doesn't say average, it only gives us what the balance is at that time. It doesn't give us two balances for Chen, two balances for Monroe. I'm not looking for an average. All right. And so when I add these, so we normally add across. When I add the interest together, that means that $92,000 is being paid in interest and should come out of this 105 that's left. And so when I calculate that, then that means 105 minus 9,200 means that I have $95,800 left after paying salary, after paying interest. So you always pay salary and interest first, then, or anything else that needs to be paid out first. Then you look at the ratios or the way that the balances are shared after all of that, and then you divide it up. So and I'm going to call it share of net income. So again, if it was a net loss, then it would have said share of net loss, but it's net income, so no worries. Share of net income, we have 95,800. So no matter what, we need to share out the full 95,800. Like they said, any remaining net income is divided. Chen gets 2, Monroe to 1, 2 to 1. 2 to 1 again, we add the two numbers when they have a ratio. Sometimes they give you a percentage. If not, or they may give you a fraction. Ratios are the same thing as a fraction. This fraction is 2 over 3. This fraction is 1 over 3. And I calculated them here, 2 over 3. And the difference, I know, because it should come back to 100%. Once I add up all of my ratios or all of my percentages. And so that means Chen gets 67%, Monroe gets 33. And so that means then 95,800 times 0.67%. So 0.67 means 67%. That means Chen is to get $64,186 of this 95,800. If I wanted to find out what Monroe is getting, I can do the same thing. I can take this amount, multiply it by 0.33 as well, or I could simply just say 95,800 minus this should give me that. When I add up the two of them, the two numbers on the side, I should come back to the same 95,800, which is perfectly fine. When I subtract, I should have a difference of, when I subtract, well, you can tell, but I will have a difference of 0. And once I have that difference of 0, then I should know that I'm done with the total side. The only thing left to do, because the question asks us now, how much net income would be distributed to Chen and how much to Monroe? To Chen, in order to find out how much to Chen, I simply add the Chen column. So add all the numbers in the Chen column, and then I add all of the numbers in the Monroe column. So once I add them up, Chen gets 102,786. Monroe gets 337,214. When I add them up, the sum of them should come back to the original net income amount that I had. And so that lets you know that your calculation is actually correct. If I was to do this in journal entry form, what would happen is I would record multiple journal entries here because I can't just, put everything to capital just like that. I would have to debit salary expense because this is salary. Salary is an expense. So debit salary expense, and then I would credit Chen capital. Then for interest, I would debit interest expense. I could debit interest expense for the 9,200. So I could do that one. Interest expense. This is going to be my debit side, so 9,200, the total of the two. And then I can credit Chen capital and Monroe capital for the relevant amounts. Let me try and dent that, of course. And so Chen, we know is 36,000. And Monroe, we know we calculated at 56,000. When we add it up, my debits equal my credits. So that's correct. So that would be the entry for the interest. These two are expenses. This, on the other hand, is just the share of net income that normally happens when you do your closing entries. So likely that's going to be income summary. And then we're going to have the income summary account. Then we're going to have the same Chen Capital, Monroe Capital, because they all go to the same account. And so that means Chen Capital is going to be credited for the 64. Monroe Capital is going to be credited for the 31. And then the income summary account is going to be credited for the same 95,800, or the sum of the two, which is the same thing. Okay, and I'll just put out the salary entry as well, just so that all entries are shown. So salary expense is what? 35,000. So 35,000. And Chen capital would be 35,000. So technically, just how you see, I'm saying that the amount going to Chen's capital account is 102. If I add up everything that says Chen, so 1, 2, and 3, it's the same 102,786. So in 3 separate entries, Chen's capital account is being credited for the value of the assets. Okay. And so this would be what would be done in this case. This is how we distribute income to partners. Sometimes after interest, let's say, so we're gonna do a hypothetical situation. Let me just copy this, move for copy. So let's say we're distributing interest and the accounts are much greater than expected. So the interest expense is, let's say, 95,000 instead, and 56,000. Let's say we have to pay interest in this amount to Chen and Monroe. That can happen. Interest or salaries can cause us to have a negative balance or remaining net income. In that case, just as it recalculated itself, it's the same concept. We take the loss that we have and we multiply it by the same percentages, the same shares. Like they said, they share, net income is divided 2 to 1. That means also that net losses are also divided 2 to 1. So net losses are also shared according to the same percentage. And so we would take the loss and multiply $46,000 loss by the 67% and 46,000 loss by the 33%. And we would distribute the loss now. All that would happen is that at the end, Chen, remember we had a larger share of net income going to the capital account of Chen and Monroe. Now we don't have that. And so that means we have to share net loss. And so in sharing the net loss, the difference is just that if it was a net loss, the income summary account wouldn't have been debited, it had been credited. And so I would have had to adjust that as well. So the loss is 46,000. So that means I would record from the income summary 46,000, and net losses reduce capital. So therefore we have to debit the accounts now for these amounts. So I would debit Chen in this case for 30820, 15180. And so it would still be in balance again, 46,000 debit, 46,000 credit. It's just now that a portion of the loss, whatever that loss is, they have to take on that loss. And so the end result is that the share to their account, yes, they still share on this 140, but it's shared differently. Now it's a different amount. And so when that does happen, that doesn't necessarily mean you're incorrect. It just means that there's a loss left over that needs to be now allocated.